I think we need to start this over, huh, kids? There was no audio on that first couple of moments. So let's just begin this from here. Trading is extremely risky. If you do not know that, you should. Trading futures, trading ETFs, trading options, trading anything is extremely risky. If you do not have money earmarked to lose, then you should absolutely not be in this game. If you've got money to lose just in case that happens, then of course you can put it in your trading account. We don't expect you to lose, but don't trade with money that you need to pay your bills. Always put your stops in first and never ever trade without doing your technical analysis. Do your homework, put your stops in. Know that trading options, futures, or anything of that nature is very risky. Now let's move forward, kids. Now that we've got the sound on. All right, so what I was showing you is we had a first round of China tariffs announced in January 2019, which immediately produced a 3,300 point dump right from here. The tariffs came out right here, and the market immediately cracked 3,300 points. At some point, it started to recover, and it rallied up to make a double top. We hit the double top and dropped 2,500 points. Now, we actually dropped further than that, but after dropping the initial 2,500 points, you rallied up, spent a little time, and then broke harder. So I'm only counting down to here, the initial drop. And we rallied out of here. Well, now, after rallying out, we have a double top too, the second double top, right? Last one, another one. And the market started to crack, and when we hit that double top, we started to make a projection. The interesting thing about this double top was it came with a second round of China tariffs. I mean, almost immediately. Just like what happened here, boom. We heard about the tariffs, and down we started to go. So OMNI belts out a projection for us that the market should drop about 3,000 points from up here. So far, we have dropped 2,009 points as of today. So it looks like we may have more downside, but nothing goes straight down, kids, right? We've got a projection. The projection is here, expecting the market to get down to the bottom of this red line, or about 23,600. But nothing goes straight down. And we have been selling OMNI day after day. OMNI's been short, either getting into a short or trying to get us short. And as of the close yesterday, OMNI decides it wants to go neutral. And let me just show you. So I put out a neutral, and I'll show you why. I put out a neutral OMNI for trading today. This is not an up arrow or a down arrow. It's a neutral arrow. So we stopped selling for one day today. Let me explain why. So now this has the projections, and you'd expect downside, right? But there's a little setup that took place that I think is very interesting, and I wanted to show everybody. So this is going to be a very quick class because it's almost over already. I only want to show you this chart. So what we have is the S&P daily cash chart, and it goes back about 20 years. And this is why we no longer sold today. We didn't buy, but we stopped selling, and let me show you why. You see what happened right after you broke the 200 bar moving average, which is this blue line. Follow me on this, kids. This is the 200 bar moving average, this blue line. Let me give it a little arrow, this way I can point to it. I move my little label around here. So here you go. We've got 200 bar moving average. What happened last time we hit the 200 bar moving average from above? You went under it for a day and got right back above, right? Well, we were under it for a day, 2 days, and it rallied up, and I went, I don't know. So this day didn't exist yet, right? And we usually get, look, the first part of this bar is underneath. There's one more bar underneath, and it gets back above. So here we are. We're underneath one more bar. I thought, let's back off, and let me show you why. Follow me as this chart goes back. What happens here? You get under the 200 bar moving average for how long? A day, right? One bar. And it jumps right back out. And what happens when you get under this one? You're there for a day, one red day, and it jumps right back above. And what happens when you get below this 200 bar moving average on this instance? It doesn't even go below. So follow this. It doesn't even get below. It stays below for a day. It stays below for a day. and then we moved to modern day times. It stayed below for one day, and here we are with a day and a half below, and I went, that's it. Do not sell this market. If anything, go neutral. If the market's going to crack further, it'll show us that. But what is supposed to happen is a hold. And we'll draw today's bar in, and look at that. It held. So the Omni, once again, we did not buy or sell. We went neutral. I backed off on selling to see if this event was going to take place. Well, it absolutely did so far, and now we've got to let it go. It might actually turn bullish from here and just take off. There's nothing says we have to make the 3,000 point projection on the downside. Now, on the upside, it's slightly different, but not by much, kids. You only stay above the average for just a day or two. Now, we don't care what happens when you get above the 200 bar moving average, right? This is a completely separate piece of analysis. But even looking at this, you'll note that it doesn't last very long on the other side of the average. But we don't really care about these for now because our attention is on when you're above the average and get lower. What happens? You're above the average and get lower. What happens? Again, you are above the average and get lower. What happens? Above the average and you get lower. What happens? You see what I'm saying? You see the theme here, kids? When I noticed this, I said, boy, oh boy, I'm going to have to show this to the crowd. Look how far back we are now. The same thing taking place. Go back even further. We're probably back to 2015-16 right now. 2016. The same thing. So as you see, a smart analyst who keeps his eyes open would certainly not be short today. And we're not short today. The Omni's seen this. So I didn't get us long because we are in a downward segment, and I do expect that we will end up with more downside. But what I expect and what I see before my eyes are two different things. I always trade what I see before my eyes, not what I expect. What I expect comes off the chart. What I see before my eyes is what we're going to do, right? I keep my opinion out of this mess. So looking back, if you just follow it, it just works every time. So what do? Don't get short down here at the 200 ball moving average, kids, which is why we're not. And that's what I wanted to show you. I did not want to make this class last too long. I wanted to show you why we've rallied today, why the Omni certainly did not go short, and why we might have to just watch it take off for a little while. Now, we will monitor it, and I would expect this thing to turn around today and come right back down. But if it does not, then we will probably be on the long side for trading on Tuesday night into Wednesday. So there it is, traders. Come on, join me at livewithoscar.com. What I have is a free trading room where I run 24 hours a day. And no credit card required, kids. So come on down. No credit cards are required. Come join me in my free trading room at livewithoscar.com. And we'll follow this market up a little and see if it wants to continue higher. If not, it's going to turn around and dump. And I will be here with you, getting you through these trades day after day. That's at livewithoscar.com. Traders, thank you so much for showing up for this presentation. Greatly appreciate my Omniacs, because without you, there's no audience. There's no reason to be me. Of course, I can continue to trade and do my stuff, but I love to show these charts. I love to show you cats what's coming next and where the pitfalls may be, and that's why I present you with these videos. So once again, thank you so much for showing up, and I will see you all at livewithoscar.com.